Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Friday, June 4th. Great to have you here as we head into the first full weekend of June. I'm your host, Jesse Allen. Thanks for joining us. You can find us online, markettalkag.com, the all-new markettalkag.com. Got plenty of new features there for you to check out, including all of our streaming sources, of course, our YouTube channel. All the links are there. You can find all the information online, markettalkag.com. Well, as we wrap up the week here and get into the month of June, wanted to bring on our good friend Mike Pearson, co-host of This Week in Agribusiness, and bring him in to talk about the market trade. Mike, good afternoon. Great to have you on the show here today. And it's crazy that we're already in the month of June, Mike.
It is. It's absolutely insane. The calendar has turned to summer. The eyes are on the sky, Jesse. We're watching forecasts, and holy cow, what a way to end the week with today's grain markets.
Yeah, markets exploding higher on that hot and dry weather forecast, and that's where we have to start. And you know, Mike, a lot of people are talking. It is, I can't remember the last time we traded a weather market this volatile. In the month of June. This is something that doesn't happen this early in the growing season, yet here we are talking about a weather market and talking about hot and dry weather in pretty much the western third of the Corn Belt.
Yeah. I think you're exactly right, Jesse. And it's worth remembering, too, that when we get into a weather market, we start to see traders get fired up about potentialities for, lack of rain or excessive heat, blah, blah, blah. If we're going to get a big move, typically that comes before a 3-day weekend when we've got that added extra day of, uncertainty and risk. We saw a 20-cent, and we're recording just before the market closed. But I mean, we saw a 15 to 20-cent jump, depending on where futures closed today in the corn market ahead of a 2-day weekend just on the underlying forecast that's out there. And Jesse, I think that highlights something that's different in 2021 versus past years where we have had weather events. I think back to 2018, when we had the huge 2019, man, everything blurs together. When we had all the huge prevent plant acres across the Dakotas, that was a weather market that got folks fired up, but we knew that we had ample stocks of grain behind us. We knew that when the corn got in, it was going to have adequate moisture. So it was a much more subdued rally than we're seeing today, because as of now, Jesse, you're well aware, we're watching a drought, not just across the Corn Belt dealing with this new crop scenario here in the U.S. We're also watching this drought continue to intensify across the southern hemisphere, which is going to shorten up supplies for that old crop corn market. A lot of folks I talked to were anticipating, particularly down in the southeast, that Brazil was going to grow a very large crop, the second crop, a safrinha crop. We were going to import a bunch of it, and that was going to take some of that, call it August, September, October pressure off end users, particularly down where they've got grain import availability. And the likelihood of being able to get that grain affordably out of Brazil is shrinking, Jesse, and that's putting supply pressure on the entire complex right now.
Yeah, we can talk more about the Southern Hemisphere here in a second. Why don't we stay on that Southern Hemisphere track, because that's going to parlay us into what we're talking about with the new crop situation. I've seen private estimates everywhere from 89.5 up to 100 for that Brazil Safrinha corn crop. We're going to find out a new estimate here next week. We have the WASDE report. CONAB will come out probably a couple days before with their estimate. We'll see what USDA does. They've been pretty much in line with CONAB here the last couple of months. But what are you hearing from folks? I know you follow chatter on Twitter as well. There's a lot of different places we're getting information about this Brazilian crop, but I'm curious to see just how much USDA is going to reduce the number for that corn crop estimate out of Brazil.
I think that's a really, really good question. And Jesse, I've got a few friends in the ethanol industry down in Brazil. I reached out to them, and they said that, yeah, the crop is coming up short. It's still far too early at least in their particular region, to get a good estimate on grain mill hit so far. Definitely, it's definitely look up on there, and this is not improving. And you're exactly right. The more this drought impacts that safrinha crop corn, the more our grain situation continues to tighten as we get throughout this summer. Looking out at the numbers expected from the USDA, I had a chance to talk with Dwayne Bussey from Bolt Marketing. He'll be on This Week in Agribusiness tomorrow on Saturday. And he and I were talking about that very issue. USDA had us at, I believe, 108 million metric tons for the Brazilian crop in the May WASD. For the USDA to drop that 13 million metric tons, that's a big number to, drop it all the way down to 95 or so. But that seems to be where the numbers are pushing. I've heard the same thought on analysts from you, that 90 to 95 million. Dwayne's comment was he wouldn't be surprised at all to see USDA come in that 90 to 95 million range, probably closer to 95 on this first adjustment, since we haven't started to see combines roll. But it is going to be a much smaller crop than was anticipated. And we've got to remember, farmers down in Brazil, 2021 is shaping up like 2020 shaped up for American farmers. Brazilian growers were going to plant massive acreage. They were going to get it in on time. We were going to have huge stocks of corn, exportable corn, coming out of Brazil and Argentina as we got into the summer. And none of that's materialized. That crop continues to get shorter. It went in very, very late. That heat got turned on very, very quickly down in Brazil and in Argentina. And it's just not there, at least to the extent that analysts assumed it would be there back when they were putting it in the ground in February and March, Jesse.
Well, and we look at that, and we look at the numbers that are to come out next week on the June WASD report. I think a lot of folks are thinking probably the biggest number we're going to be watching is that Brazilian number. We're not expecting too many other changes in the June WASD. I'm pretty much under the thought process from everyone I'm talking to that at this point, whatever the number is, whether it's 100, whether it's below that, we have to produce a good crop here in the U.S. And that's where this focus on the weather market is shifting here for the United States, is the fact that we have to produce a good crop. And we look at that northwestern third of the Corn Belt, the Dakotas, Montana, starting to even see eastern Nebraska, northwest Iowa getting dry. And it's not necessarily a fact of not enough rain, but I mean, that's the part of it, but there's also subsoil moisture. It's just not there, Mike.
Yeah. Right. I mean, we've got to remember, and of course, your listeners who are farmers absolutely remember this, and they can look out in their field and see it. But for a lot of folks in the Corn Belt, that water faucet got turned off last August, in some cases in July, and really never turned back on. So you've had a full 6 months of tiles draining, of subsoil moisture continue to move deeper into the soil. And granted, I think a lot of places, and I'm not talking about North Dakota. North Dakota it's catastrophic. The drought conditions happening up there north and west of Bismarck, or I guess centered really on Bismarck, and then working itself in a U down into South Dakota. That's catastrophic. That is a drought that is going to be persistent. I was talking to Greg Solier, our meteorologist on This Week in Agribusiness, and he doesn't foresee any big pattern shifts coming for the Dakotas in the immediate outlook. I mean, looking out for the next 6 weeks, doesn't appear to have anything major changing position. Now, you come out of the Dakotas, you come into Iowa, you come into, parts of Illinois, Indiana, Ohio. The crop is short on subsoil. It is very, very dry, but there have been enough rain events moving across, providing, the haves and the have-nots with moisture. And I do think we're going to see pretty excellent crop condition ratings coming out on Monday. Over the past 24 hours, I've had the chance to drive about 1,200 miles, and things are looking good. Granted, this was all in Iowa and Illinois. So granted, the breadbasket, and the place that's really sitting fairly well in terms of moisture availability this year, it looks good. It looks good. I think we're going to probably see a little bit of a sell-off come Monday when the good to excellent corn numbers come in higher, despite what could be coming out of North Dakota. But I think at the end of the day, Jesse, you hit the nail on the head. We need to have a big crop. There's concern now amongst traders that we didn't see corn acres increase as much as kind of we thought we would as we were heading into this planting season. We continue to see exceptional demand from ethanol plants for corn. There's very strong demand from the pork industry. The cattle industry is continuing to buy corn. I don't think they're demanding it. They're looking for ways to cut those costs, but they're still in the market paying these prices. And really, what has me interested as we look out long term through this summer and into the fall, ethanol. So Iowa State University has the Center for Ag and Rural Development, perhaps it's CARD. I encourage all of your viewers to look it up. CARD, they're a group that does a research program looking at historical ethanol profit margins. And they updated theirs at the end of May, looking at the corn being priced in their margin was priced at 702 per bushel. That was the cash corn price going into their ethanol margin calculations. And at $7.02 a bushel for corn, ethanol plants were profitable. So that tells me there is a ton of profit margin here in these ethanol plants right now as they're looking at both demand for ethanol, which has been screaming higher as Americans are driving more, and demand for co-products. We continue to see the livestock sector demand these co-products that they had a really tough time getting their hands on throughout the COVID crisis of 2020. Ethanol plants, to me, are going to be the bellwether, Jesse, as we're getting through the summer and into fall for just what kind of cash corn demand is going to be out there. As of now, that demand looks really, really strong. I am optimistic as we get into this summer time period, but everything's depending on weather right now.
Very much so. And to your point on cash corn and basis in general, we still have strong basis, a lot of positive basis in parts of the country, but also start to see that soften just a little bit in some areas too. So that's going to be an area we're going to watch. And also on Iowa, I was in north central Iowa over the holiday weekend. It's dry there. I'm thinking though that Iowa, it's like an election. It could be a swing state. I think
Yeah.
Iowa, if the jet stream doesn't set up right and Iowa turns drier like the Dakotas and areas to the north and west of there, that could be the quote unquote black swan event that adds an explosion higher to these grain markets. We're already pricing in a premium, but we could take this thing higher, I think, if Iowa turns really dry.
I think you're exactly, Jesse. We need every single of bushel this year. That the market is telling. And to point, we could see grain skyrocket. That tells me this is if you're an end user, if you're a livestock business, let's start looking at this. Was Grand A. This has a pretty substantial back in corn price, and this is opening them up to opportunity for those folks who need to get some end user cover before this new crop supply becomes available. Let's grab opportunities while they're here, because that jet stream moves, this heat wave, this dome sticks around for extra 5 or 6 days or returns at pollination. Holy cow, we could really light some gas under this.
Yeah, we really could light some gas under this, Mike. I really truly believe that. And I think for farmers, the biggest key for them right now is again just is working off the rallies if they are still making sales. I think a lot of folks are sitting pretty well with their new crop sales, that 40% range, 30%. I've even seen some guys who are 60% sold on new crop corn. I think the biggest thing moving forward is working off these rallies, Mike.
Yeah, 100%. And, we've talked about it a few times, but I think it's worth mentioning, and it's worth keeping in mind as we get through this summer. Keep an eye on your local markets. Keep an eye on elevators or end users or buyers within driving distance that you don't typically look at. I just got curious. So I pulled up my old feed mill at Grinnell, which is a key co-op property. Right now, for a September delivery of corn into the feed mill, they're bidding 89 cents over the September. So they are needing corn. Their current bid right now, cash price is $6.95 at the Grinnell feed mill. There are going to be these tremendous opportunities and basis pops as the physical supply of corn gets tight. And that can be a great place to add a few pennies to your marketing just by maybe hauling to a place you don't think of all that regularly. So keep an eye on the entire network of buyers around you throughout the summer if you've got old crop grain to get marketed.
Mike, let's switch our conversation to cattle here real quick. I know this cattle market, you're a cattle guy, and I mean, we've been watching, hit after hit, it seems. The JBS cyber attack was the big talk here this last week. We saw export sales released Friday morning. They were pretty dismal for beef. But yet the cattle market hung on for the most part on the day. Feeder cattle, obviously, with higher core prices, traded lower. But overall, this cattle market, it just seems like we cannot catch a break. Packer margins is another big story that's out there. There's a lot of things that are negatively impacting cattle right now, Mike.
Yeah, there really are, and you know, your viewers know this, your listeners. We've talked about this on the past few times I've been on. I am a cattle bull. I am. I look at what consumers are willing to pay for beef at the meat case, and I'm one of them. My girlfriend and I, this past weekend, it was beautiful weather. We decided we wanted to grill, so I went and bought some ribeyes. They were $17.99 a pound. I spent $40 on steaks to eat at home for two people, and there was demand. I mean, there was a line at the meat case. So that tells me that the consumer has accepted these prices for beef. They may not love them. And I think we are going to see these retailers push beef prices back down over time. But it shows us, it's an insight into these consumers' minds that they're willing to pay this price. The challenge we've got right now is that the cattle cycle is a slow one. And it's a very long cycle from signals, price signals being sent by one sector of the market to them being received on down the chain. And the problem in the cattle industry right now is that we've got a lot of producers who have been struggling for 2 or 3 years. We're watching these packers make a killing year in and year out. And every time there's a problem with supply, the packer makes the money. JBS gets hacked, so it's their fault, right? I mean, they didn't have their stuff defended. So JBS gets hacked, and we take the entire cattle market, you know, down on Tuesday as trading reopens. That's frustrating. And it's frustrating in a way that goes beyond just, no, I don't want the greedy packer making all the money. This is my bottom line for a lot of these cattle producers. And for JBS to not do what they're supposed to be doing with regard to their data or whatever it was that was hacked, for all of us in the sector to take a hit because they messed up, that's wearing on people. That's wearing on producers. That is phenomenally frustrating. And we've seen this happen with the plant in Kansas, the Tyson plant. We saw this happen, obviously, with COVID, which we can call a black swan, a one-off event. And now we're seeing the same thing happen with this hacking. This is the type of signal that's going to play itself out over time as long as this cattle industry, the packing side of this cattle industry, is as consolidated as it is. The problem we've got right now is there is every incentive in the world to kill as many cattle as possible because we're making $400, $500, $600, $700 a head doing it. But when you're not in competition, when there's 4 of you and you all kind of respect each other's markets, well, now there isn't the incentive to kill more head. It's the incentive to plateau the kill and to keep the retail prices high. And that's where we're at right now. And I am, Jesse, we've talked a lot. I'm a crackpot, anti-government, libertarian, nutball. I hate to see more laws. I'm kind of frustrated to see this action happening on the cattle side of the ledger. I think more laws are a bad thing, generally speaking. But in this cattle industry, we got to do something. And maybe it's rolling out about the bad laws that prohibit more folks from jumping in, because right now it's $700 a head. We should have every Tom, Dick, and Harry slaughtering beef at the side of the road and selling it, but we can't. And that's hurting the industry. And until that comes around, I think we're going to see a lot more political pressure on packers as we go throughout the year. It seems like this administration is going to be fairly open to anti-competitive accusations from the producer's perspective to the packer. Things are going to get shaken up. Let's not throw the baby out with the bathwater as we're talking about changing some of these laws. But I'm coming around to the fact that something needs to be done. The industry itself can't be punished because JBS couldn't, keep their flash drives from being hacked. And I don't know, Jesse, I'm frustrated. Long term, I do think prices are going to turn up. I think the consumer is positive beef. I think as this inflationary scare works its way through the economy, cattle are the only discount market out there. They're the only thing trading at a price that isn't stupid high right now. And I think that's going to pull in buyers.
I would agree with you. That was going to be how I was going to respond to you on that. I think out of everything.
Sorry for the rant, Jesse. I didn't mean to come on here and start ranting, but I've defended the Packers for a long time because I think the market works. The price signals tell the Packers kill more cattle come online. That brings down prices, that depletes the supply of cattle in the countryside. Their prices climb. The balance works, even if it takes some time. And I just wonder if maybe the balance isn't working. I mean, maybe the time is now to explore political options for making the system work for more people.
I think longer term, I think you, me, I think a lot of folks are watching this cattle market and they're optimistic that longer term, third quarter, fourth quarter, if we can put up with the frustration and keep our mental health intact as a cattle rancher right now, that with some change, whether it be political or whatever the case may be, or shaking up that balance a little bit and readjusting it, that this cattle market's going to come back around second half of this year. It
Yeah.
almost seems like it has to.
I
And I think
mean,
that's some of the solace that people are taking, that we're hoping for that back half of this year.
right. I mean, you look at a grocery store and you say, if consumers are spending $20 a pound on beef, how does that not come back to the producer at some point? Now, granted, the challenge we've got is we have a very tight supply of beef in the marketplace and a consumer willing to spend a ton. So they're willing to inflate the price at the retail side. And we still have a big supply of beef in the countryside. We still do have some heavyweight cattle. That's going to be a bigger problem here in the short term. Estimates are that we're going to be down 137 or 130,000 head in the slaughter this week. That's backed up cattle. That's heavier weights hanging on the rail next week. We can't seem to get ahead of these issues, and it's frustrating. I hope we can.
Well, and to your point too, I think at some point, at the meat counter, the demand is there, but if price continues to climb, it's not going to be there. I mean, maybe I'm cheap, but I turned away from an $11 steak this last weekend in the meat counter. I bought pork.
100%.
That's maybe it's just me. Maybe
No, that's what
cheap.
needs to happen. The prices ration demand, and
Yeah.
beef prices, when you've got a rich consumer, which we do in this country in 2021, we've got a lot of folks sitting on a lot of piles of cash they didn't have 13 months ago. They're willing to spend it on some quality beef. But you're right, eventually that's going to give out. The prudence will return, and they'll start making some of those same comparisons in the meat case.
Speaking of pork, briefly, I love your thoughts on hogs. I know we don't have that many independent producers out there these days,
Right.
but man, the fact that hogs are trading at a premium to fat cattle right now on the board, this is getting to a point where it's almost like it's almost make believe, Mike.
Oh, it is. It is. It's insane. I look back at the first time I really traded the hog market. Was the PED scare of 2014. And that was a rocket ship. And we were losing hogs right and left in this country. And, we were seeing farrowing rates down substantially. It was a huge supply issue. And we pushed pork up to 133, 134, whatever we peaked at there in 2014. It was a wildfire. I mean, that was a crazy year. And it was driven by the fact seeing hogs die right left in this country. And bunch being to control PED. In 2021, we still have PEDs, still a concern. I don't mean to minimize that. PER is obviously a concern. We still have health issues. This past year was a tough one for hog producers. Supply definitely took a hit. But right now, we're seeing prices north of 110 because of demand. This is not a supply issue broadly. This is huge foreign demand, obviously big Chinese demand carrying out throughout the year, and extremely strong domestic demand for pork. We saw the pork industry completely realign itself but broadly farther from food service towards the grocery aisle than they had been in a while. And consumers, it's resonated. Folks are making the same decision you made, Jesse. They're going into the meat case and they're going, oh man, $15 for a ribeye or $4 for a thick cut pork chop. Boy, I can buy an awful lot of pork chops for $16, and the numbers work, and the demand is continuing to stay very, very strong. I'm really excited. Next week, I'm going to go to the World Pork Expo in Des Moines. First time they've had it in person since 2018, I believe. Mm-hmm. 2019 was African swine fever scare, and 2020, of course, was COVID. So I'm really excited to get connected with the hog producers down there. Typically, a lot of independent producers go to that show. So I'm looking forward to hearing how this past year has been for them on a detailed basis, rather than just looking at the big picture, because so many independent producers have various agreements and contracts in place with suppliers, and plants, that this year has been volatile. So if you're going to be at World Pork Expo next year, look me up. I'll be at the media center and I'll just be running around. Find me on Twitter at Pearson Cattle and drop me a note. I'd love to hear from you if you're going to be there, listener.
Yeah, definitely. Next week, gonna be a great event. I wish I could be there. I was trying to make it work in my schedule, and I
Yeah.
couldn't juggle enough things to get back to Des Moines for even a day for that. But I know we'll look forward to your conversations from that. I'm sure on This Week in Agribusiness
You bet.
and much more, Mike.
Absolutely, Jesse.
Well, Mike, as always, I appreciate the time. Thank you for jumping on with me here today on Market Talk, and I know we'll talk to you again soon. And with that, I'll wish you a great weekend, sir. Thank you.
Hey, thank you, Jesse. Have a great weekend as well.
You can find him on Twitter at Pearson Cattle. Mike Pearson, co-host of This Week in Agribusiness, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Friday, June 4th edition of the show. I'm Jesse Allen. Have a great afternoon and a great weekend.